6 months ago, I did something most people are too scared to try. I took $500, money I could actually afford to lose, and I put it straight into the stock market. No fancy strategy. No insider tips. Just $500 and a simple plan. And today, I'm going to show you exactly what happened. The real numbers. The mistakes I made. And whether it was actually worth it or a complete waste of money. Because here's the thing nobody tells you. Most finance videos either show you someone who got insanely lucky or someone trying to sell you a course. This is neither. This is just real numbers from a real 6 months that you can actually learn from. So if you've ever had a few $100s sitting in your bank account and thought, should I actually invest this? Stick around, because by the end of this video, you'll know exactly what I do differently and what I do exactly the same. Let's start with the plan. Back in December 2025, I took my $500 and split it into an S&P 500 index fund. For anyone who doesn't know what that means, it's basically a single investment that owns a tiny slice of the 500 biggest companies in America. Apple, Microsoft, Nvidia, Amazon, all of them in one purchase. Why did I choose this instead of picking one stock and hoping it would moon? Because I wanted this experiment to be something you could actually copy. Not everyone wants to gamble on a single company. Most people just want to know, if I put money in the market and leave it alone, what actually happens? So I made one rule for myself: no panic selling. No matter what happened in those 6 months, even if the market dropped 15%, I would not touch it, because that's actually the single biggest mistake new investors make. They invest, see a dip, panic, and sell a loss. So honestly, this was as much a test of my patience as it was a test of the market. What actually happened? So here's where it gets interesting. The first month, almost nothing happened. My $500 turned into about $506. Not exactly headline news, right? I'm not going to lie. It was a little anticlimactic. But then, going to the new year, something shifted. 2025 had actually just wrapped up as a strong year for the market. The S&P 500 finished up around 16% for the year. And going into 2026, there was a wave of optimism. Big tech companies were posting strong earnings, and there was real momentum behind artificial intelligence stocks specifically. Companies like Nvidia and Microsoft were pulling a huge chunk of the entire market's gains almost by themselves. By spring, the index had actually pushed past 7,000 points for the very first time in history. That's right. While I was sitting there with my $500, doing absolutely nothing, the market itself was hitting all-time highs. Pullback slightly more grounded. But, and this is important, it wasn't a straight line up. There was a real scare in early April. The market dropped hard, more than 15% from its highs, after some tariff announcements spooked investors. For about a week, I'm not going to pretend I wasn't a little nervous watching my $500 shrink in real time. This is the part most finance videos skip. They only show you the win. But if you're going to actually learn something from this, you need to see the dip too, because that dip is exactly where most people would have sold and locked in a loss. Pick pace back up more confident. I didn't sell. I just closed the app for a few days. And within weeks, the market didn't just recover. It absolutely ripped back upward. By the time the dust settled, that April low turned into one of the sharpest recoveries in recent memory. So, 6 months later, here's exactly where my $500 landed. My investment grew to roughly $558. That's an actual return of about 11.5% in 6 months. Now let's put that in perspective, because a number alone doesn't mean much. If I had left that same $500 in a regular savings account at a typical interest rate around 3 to 4% a year, I would have earned maybe $10 in that same 6-month window. $10 versus 58. That's the actual power of investing versus saving. It's not magic. It's not luck. It's just math and time. What I learned from all this. Now here's what I actually wanted to take away from this, because the number isn't really the point. First, 6 months is still a really short window. The S&P 500's long-term historical average return is closer to 10% per year, not per 6 months. I got a bit lucky catching a strong stretch of the market. If I'd started this same experiment back in early 2022, those first 6 months would have actually shown a loss. So, don't expect this result every single time. Second, the dip in April taught me more than the gains did. Watching my $500 drop to around $420 during that scare was uncomfortable. But it's also exactly why so many people lose money in the market. Not because the market is bad, but because they can't emotionally handle watching their money shrink, even temporarily. Third, and this might be the most important point in this entire video, 85% of the market's long-term return doesn't come from picking the perfect stock. It comes from staying invested and letting dividends reinvest over time. Boring? Yes. But boring is what actually builds wealth. If I'm being completely honest with you, there's one thing I'd change. I'd have set up automatic monthly investments instead of putting the full $500 in at once. Because if I'd added just $50 more each month on top of that initial $500, my 6-month total wouldn't just be $558. It would be closer to $850 invested, growing the whole time. Direct-to-camera advice tone. That's called dollar cost averaging, and it's honestly one of the simplest ways to reduce your risk while still being in the market. You're not trying to time the perfect moment to buy. You're just consistently showing up, month after month. So, was $500 worth it? Honestly, yes. Not because I got rich. $58 isn't going to change anyone's life. But what I got out of this was proof. Real, live proof that investing isn't some mysterious thing only Wall Street guys understand. It's accessible. It's available to literally anyone with a phone and a few $100s. Slow down for final line. Sincere. The market went up. Then it scared me half to death. Then it recovered. And through all of that, the only thing that actually mattered was that I didn't panic. Direct call to action, warm but clear. If you've been sitting on some money, wondering whether it's worth it to start, I hope this showed you exactly what that journey actually looks like, the good and the uncomfortable parts both. Let me know in the comments, would you have sold during that April dip or held on like I did? And if you want to see how this same $500 does over the next 6 months, make sure you're subscribed because I'm tracking every single dollar of it. Thanks for watching. I'll see you in the next one.